Warning: Mexico owes the United States a significant amount of money. This debt, which amounts to billions of dollars, represents a complex problem with far-reaching implications for both countries. If divided equally among the Mexican population, each citizen would carry a considerable financial burden. This stark reality underscores Mexico's position as a major debtor to the United States and raises critical questions about the consequences of a potential default. The magnitude of this debt casts a long shadow over Mexico's economic prospects. It limits the government's ability to invest in crucial areas such as education, healthcare, and infrastructure. The weight of this debt also serves as a constant reminder of the power imbalance between the two nations, fueling resentment and distrust among sectors of the Mexican population. One of the most pressing concerns for the United States is the risk of Mexico defaulting on its debt. This scenario, while undesirable for both countries, presents a particularly complex dilemma for Mexico. The country faces a precarious balancing act, caught between the need to meet its financial obligations and the desire to protect its own economic interests. One option available to Mexico is to pay the debt in devalued dollars, effectively reducing the real value of the debt. However, this strategy could have significant repercussions for Mexico's creditworthiness on the international stage, making it more difficult and expensive to obtain future loans. Another possibility is for Mexico to use its gold reserves to cover the debt. However, this option is complicated by the fact that a significant portion of the world's gold reserves are controlled by China, a country with its own geopolitical agenda. Adding another layer of complexity to the situation was former President Trump's proposal to buy the Mexican state of Sonora. This proposal, met with immediate and resounding rejection from Mexico, highlighted the strategic importance of Sonora and its resources, particularly lithium. This vast, sun-drenched state, bordering the United States, possesses a treasure trove of natural resources, making it a coveted prize in the global race for energy dominance. Sonora's abundance of lithium, a critical component in the production of batteries for electric vehicles and renewable energy storage, has made it a focal point of interest for the United States. As the world transitions towards a greener future, the demand for lithium is skyrocketing, making Sonora's reserves increasingly valuable. Mexico's refusal to cede this strategic territory underscores its determination to maintain control over its natural resources and chart its own economic destiny. Lithium, often referred to as white gold, has become a strategic resource of paramount importance in the 21st century. Its unique properties make it indispensable for the development of batteries for electric vehicles, a cornerstone of the global transition to clean energy. Mexico, with its vast lithium reserves, finds itself at the heart of this new gold rush, attracting the attention of global powers eager to secure their share of this valuable resource. The surging demand for lithium has sparked a global scramble for control of existing reserves and the exploration of new deposits. Countries like China, with their dominance in battery manufacturing, are actively seeking to secure long-term lithium supplies. Mexico's lithium reserves, therefore, represent not just an economic opportunity, but also a strategic asset with the potential to reshape the dynamics of global power. Global shockwaves, the domino effect of default. The specter of a Mexican default on its debt sends ripples of anxiety through the global financial system. Such an event, with its potential to trigger a domino effect, could have catastrophic consequences for the world economy. The dollar, long considered the world's reserve currency, could face a crisis of confidence, leading to a search for alternative currencies such as the Chinese yuan or the euro. A Mexican default could also undermine investor confidence in emerging markets, making it more difficult and expensive for developing countries to access the capital they need to grow. This could exacerbate existing inequalities and further destabilize the global financial system. The interconnectedness of the global economy means that a crisis in one part of the world can quickly reverberate across borders, impacting even the seemingly most isolated nations. A golden safety net? Mexico's strategic reserves. In a strategic move aimed at mitigating the risks posed by a fluctuating dollar, Mexico has recently opted to sell a portion of its gold reserves. This decision, while seemingly counterintuitive in the face of potential economic instability, reflects a calculated effort to diversify its foreign exchange reserves and protect its financial interests. By converting a portion of its dollar-denominated assets into gold, Mexico seeks to insulate itself from the volatility of the U.S. currency. This strategy, employed by central banks around the world, reflects a growing concern about the long-term stability of the dollar, particularly in light of rising U.S. debt levels and inflationary pressures. Mexico's decision to bolster its gold reserves underscores its commitment to safeguarding its economic sovereignty and navigating the complexities of the global financial system. Navigating uncertainty. Potential scenarios. The path forward for Mexico and its relationship with the United States remains shrouded in uncertainty. Several potential scenarios could unfold, each with its own set of implications for both countries and the wider region. One possibility involves a renegotiation of the terms of the debt, which could include a grace period or a reduction in interest rates. Another, more drastic scenario involves the ceding of Mexican territory, such as parts of Sonora, to the United States as a form of debt repayment. This scenario, while highly controversial and improbable, highlights the extreme pressures facing Mexico and the potential for the debt crisis to escalate into a geopolitical flashpoint. The global power play, currency wars, and shifting alliances. The economic dynamic between Mexico and the United States is playing out against a backdrop of global competition. The rise of China has challenged the dominance of the United States, leading to a realignment of global alliances. Mexico, nestled between these giants, is at the heart of this struggle. Strengthening ties with China reflects a pragmatic approach, but it could alienate the United States and jeopardize their economic relationship. The Mexican people, caught in the crosshairs. As Mexico grapples with the weight of its debt and the complexities of its relationship with the United States, it is the Mexican people who ultimately bear the brunt of the consequences. The specter of economic instability, coupled with the potential erosion of national sovereignty, has fueled anxiety and uncertainty among the population. The possibility of social unrest, driven by economic hardship and perceptions of government mismanagement, looms large on the horizon. The Mexican government faces the daunting task of addressing these concerns while navigating the treacherous waters of international finance and geopolitics. A call for transparency and accountability. In these uncertain times, transparency and accountability are paramount. The Mexican government has a responsibility to be open and honest with its citizens about the true state of the economy and the challenges facing the country. This includes engaging in a national dialogue about the debt crisis, its potential implications, and the difficult choices that lie ahead. Equally important is the need for accountability. Those responsible for the reckless economic policies that have exacerbated the debt crisis must be held accountable. This includes not only government officials, but also private sector actors who have profited from cronyism and corruption, charting a course towards a secure future. The road ahead for Mexico is fraught with challenges. The country faces a complex web of interconnected problems, from its massive debt to the geopolitical rivalry between the United States and China. Navigating this treacherous terrain will require skillful diplomacy, sound economic management, and an unwavering commitment to the well-being of the Mexican people. Mexico must prioritize sustainable and equitable economic growth that benefits all its citizens, not just a privileged few. This will require investments in education, infrastructure, and innovation, as well as a concerted effort to combat corruption and strengthen the rule of law. By embracing transparency, accountability, and a commitment to the common good, Mexico can chart a course towards a more secure and prosperous future for its people.